Hello, I'm Jason Stevenson, the Resources Analyst for Money Morning and Resource Speculator. You may have seen the Facebook update from yesterday talking about the gold chart. Today, I want to expand on that chart and provide another chart and more information for you. If we're looking at the 5-year weekly chart in gold, we're starting with the high in 2011 at 1,900 per ounce. The low, frankly enough, was at $1,307 per ounce. As you can see with the blue line, that's the resistance level. The pink line is the support level, which I showed you yesterday. Over the last 5 years, the gold price has been hovering between these two levels. For example, in 2013, when you saw the huge sell-off from 2012, following Mario Draghi coming to the rescue of Europe, that came down and breached the pink line for support. Recently, we've seen gold in an uptrend earlier this year from its low in December at $1,060 last year when the Fed raised interest rates for the first time in years. Last week, the market was caught by surprise from the Brexit, and gold surged $100 in 1 day per ounce, hitting that high of $1,360 per ounce. Previously in a Money Morning article, I thought, based on my previous analysis, that the resistance would form around $1,385 per ounce. It appears that that was not the case, and it appears that gold, the true resistance, is now around $1,360 per ounce. What this is telling you is that for a bull market to truly take off, we need a weekly closing above that blue line to signal that potentially gold could be in that bull market state. However, at the moment, there's no indication to show that gold is in a bull market, and that is why I am still bearish in gold and believe that we'll hit $931 per ounce. So what I expect potentially in the months ahead is for gold to swing around and come back down to crash below the pink line. The reason why I say that is because from the Brexit, we've had the pound now starting to sell off significantly. We've got the euro starting to sell off. We've got emerging currencies starting to sell off, and the US dollar is starting to rise. As the US dollar starts to rise, you should see more pressure putting against the gold price in the months ahead, and that may see gold dip below the 1,000 level. If we can move to the monthly channel, this is the monthly chart for gold. As you can see, gold is in a long-term bull market dating back to 2002. That is when gold broke out from its 1999 level low. The green line shows that the majority of support actually hovered across that line. That's based on a monthly closing. We can see here, on looking at the blue resistance and the pink support lines dating back to 2011, the high and the low in that year, that there's been nice support along that line and resistance. So what I expect in the months ahead, if I'm correct, is that with the US dollar getting stronger and a contagion event happening in Europe, you may see gold, which is an asset and not money, sold off, coming down and hitting below the pink line, potentially bouncing off this green line before the bull market starts, the gold bull market starts. Thank you.
Click here and follow the instructions to download your free report. As I mentioned earlier, this is a free daily e-letter written by me and my colleague Vern Gowdy. If you're worried about an Aussie recession, you'll love Vern's work. He's a no-nonsense analyst who's seen it all before. Sign up now to get your free report, and thanks for watching.
If you're interested in more market analysis, make sure you subscribe to our channel.